The United States government, for the first time, has hit $31 trillion in debt. And here I'm going to explain to you why that is actually a good thing, why it's bullish for stocks, and why you really should not be listening to fear-mongering economists like how this is going to be Armageddon, the U.S. empire is going to collapse, and you should be buying silver and protecting yourselves. That's just complete nonsense. So first off, you got to understand this core difference between, and this has really helped me think about this, because actually when I was in high school, this is crazy for a high schooler to do this, but I would look at the U.S. debt clock. And it's a weird thing for a high schooler to do this, but I would see it go up and up. I'm like, oh my gosh, that's scary. But in 5 years from now, easily it could be 40 trillion, 50 trillion, and someday it's going to hit 100 trillion, right? And that's actually bullish. So let's look at this example, okay? Let's say you want to go buy a business, and you can do this for a house, whatever it may be, and you use debt to do it. Okay, so let's say you could buy a business for $100,000. Let's say you put 50% down, so you're now $50,000 into debt. Now, let's say that company makes you money, and that company is now worth $150,000. Well, are you in debt or do you have debt? Okay, yeah, you have $50,000 of debt, but the company's worth $150,000. Are you in debt or do you have debt? You have debt, but that doesn't, and if you think about it, that debt actually made you money. And if you would have just used your cash, like say even if you got 2% in the bank, technically that was a better route to do. Now, obviously, it depends on the debt you're doing, or the interest rates and all those different terms and stuff like that. But generally speaking, that debt made you money, and that's what companies do. So I'm actually going to pull up this little thing right here from Wikipedia and to show you that the U.S. is tied for the second best credit rating. Okay, there's only a few other countries like Sweden, Singapore, Norway, Netherlands, etc., Luxembourg, have a better credit rating, but those are small countries, right? So generally speaking, the U.S. is the best, economic-wise, or on the top, right? There's no big deal, and we have such a huge population. But also who has credit ratings is actually companies. So there's actually two companies that have a better credit rating than the United States government, Microsoft and Johnson & Johnson. So companies like Apple, Microsoft, Johnson & Johnson, Coinbase, Twitter, or like even Elon Musk, he's using debt to buy out Twitter. Companies use debt to fuel and buy assets and other ventures because it adds value to their company. And why is that? Well, let's take, for example, Microsoft. They bought LinkedIn, and I think they used $10 billion of debt to do that. So, okay, they had a choice. They could use $10 billion of cash, which they could if they wanted to, and that's going to remove from their market capitalization. That removes from their equity. That takes it out. So now they use $10 billion of debt instead. And let's say, LinkedIn, over a certain amount of years, that's added $30 billion of market capitalization to Microsoft. I mean, LinkedIn obviously makes Microsoft money. There's value there, and there's a reason they have that. Same with GitHub and all the other acquisitions they made. The U.S. in 2022 collected $4 trillion in revenue. So ask yourself this question. If you're let's say $310,000 in debt, and you have this thing making you $40,000 a year, is that good or bad? Well, it depends. If you owe that debt now, then yes, you don't have enough money for it. If you owe it a year from now, yeah, that might be a little scary. But if you owe it 30 years from now, or if you just have to pay a certain amount, let's say from that $40,000, you only have to pay 10 of it to service it, right? And because then you know that like in 5 years from now, maybe that you're now making $80,000 from that business or whatever it may be, or from that, then it's no big deal. You'd rather use that debt because you're paying it off. No big deal. You're servicing it. Okay. So, that's, again, example of being in debt versus of having debt. And this is why if you own assets like stocks, and if you want to learn about trading options or if you want to make money with options, I'm your guy. I think that's a really cool way to create consistent income. So make sure to subscribe to this channel, like this video, etc. if you want to hear more about that. But if you own hard assets that are valuable, that go up, then this is going to be beneficial for you because as there's more debt in the economy, it stimulates the economy. It creates economic activity. For example, let's say you could not get a home loan. Let's say no one could get loans. Loans were banned. Let's say they're illegal. Okay, tomorrow getting loans on homes is illegal. Well, you're going to see a lot less economic activity happening in the real estate market. Now, you still will, but there will also be a big gap. You'll only see really rich people doing it because maybe they'll do private loans and things like that. But let's say, the everyday Joe could not get a loan for a home. Well, they couldn't get into real estate. It would be harder to rent out. You also probably see like rent prices go up in value too because then people need to get a higher return compared to, people could just get a loan. So debt fuels economic activity, and economic activity fuels profits for companies. And if you own stocks, that provides enterprise value, equity to the stocks. So if you own stocks, that's a plus. That's great. And obviously, if you want to learn about options to even fuel even more on your stocks, I'm your guy. But I don't really like, saying, okay, the U.S. is in debt and all these things, so you should buy silver, you should buy gold, you should buy commodities, you should protect yourself because of this. Now, the issue with that, if you take things like silver or commodities, it doesn't produce anything. Like, it's not producing anything. Microsoft, it produces profits. It produces innovation. It comes out with new things. It's looking forward. It has employees working every single day and pushing. It's fueling the economy. Where you have silver, it's like, okay, I can use this to, do a few things with. Like, it doesn't do anything. So, and the reason why I'm saying this is because you have to ask yourself the question is that if the U.S. is getting more and more in debt, if there's more debt fueling the economy, well, whatever you own needs to outperform that. Like what's more valuable, cash today or silver? I would actually argue that cash today is more valuable because then you can use that to, leverage and make assets and build companies and all these different things compared to like silver, where I think silver will underperform that, which it has over the last 10 years. You would have been better off like having money in a savings account, I believe. Actually, I could be a little wrong there. But that's why owning stocks is so much better, because you have something that's producing. So that, because that economic activity, it's going into, yes, it will raise prices. So like once the U.S. economy hits $100 trillion in debt, commodities will be worth more. Like the price of banana will be worth more. The oatmeal will be worth more. Clay will be worth more. But the S&P 500 could be 10,000, 20,000. Apple stock could go from 140 to 500, 600, because it's that economic activity going to it. So that's really helped me kind of shift my thinking, is like debt fuels economic activity. Economic activity fuels profits for companies, which is great for shareholders. So if you like this video, please subscribe. I would really appreciate it. Also, if you want to learn about options trading, I have a bunch of content related to that, and also a software company. But yeah, thank you for listening, and I will see you in the next video.